Hello, Peter. Thank you for joining us today.
Tudor, thanks for having me. Good to see you again.
Yeah. So I just wanted to get your thoughts on a few trends and points looking at both the industrial sector and the office sector.
Great.
And I wanted to start with, I'm just going to kick it off here with industrial.
Okay.
So as we're coming off the tail end of the post-COVID supply surge in industrial, how do you see 2026 playing out in terms of like momentum and supply?
Sure. So from a supply side, we saw record numbers, right? So coming out of 22, 23,
Yeah.
record deliveries, billions of square feet, put onto the market, and through 25, it was absorption. Like I'd say a normalization of how that new product gets absorbed into the marketplace. We saw an increase in manufacturing deliveries in 2025, right, which is new, right? Before it was a big run up on warehouse and distribution. I think data centers are playing a part as well, right?
Huge part, yeah.
Huge part, essentially, market specific, right? So you saw a lot, everything around DC is essentially focused on that. You had Atlanta was a big jump, some stuff in Phoenix and Texas, but that's played a part in the delivery schedules. And then getting into the next back end of the decade here, we saw an uptick in back to warehouse and distribution. So a surprising thing to me was looking at the numbers for 2026, and we saw Amazon, 2 million, 3 million square foot warehouses that are going to be delivered again, which was, I thought that was more of a 28, 29 piece, and it's exceeding expectations and schedules for us.
Yeah, so it's happening a bit sooner, yeah. And from like looking at all this data, like from a data analysis point of view, like how do you look at the various trends shaping demand today? Like, are there any new challenges coming up, or?
Yes. So just as we gather the data, and it's a lot of information. Now we're tracking between office, industrial, retail, 350,000 buildings, right? So it's a lot of information. With less properties under construction now, we saw that construction pipeline shrink, right? So I think there's more touch points for our group and our team, being able to identify delivery dates better, understand more of the pattern and those things that are happening. So I think that's a benefit. At the same time, any kind of time we'd save with less deliveries is getting sucked up by available space, right?
Yeah.
So that listing volume is increasing. So we saw, vacancies were down, in fours during COVID back end, and now we're up to, I think it was like 9.2% in our most recent study. So you saw, the vacancy information definitely increase, and we've been, battling to keep up with the listing side for that.
Yeah.
So it's been a challenge.
Oh yeah, yeah, and sort of over here at CP, we have this annual series where we look at emerging industrial markets, which are typically these smaller secondary, tertiary markets. I wanted to ask, if there are any specific challenges that come up when looking at these sort of markets as opposed to established gateway markets, and if there are any like trends you've been noticing and just something to keep an eye on.
Yeah. So
when analyzing
the secondary, tertiary markets, I think it's positives and negatives of just tracking the data, right? First of all, there's less properties there, so there's more access to the information. But at the same time, I would say if you're missing something, it shows more, right? There's no hiding behind the data in those smaller markets. So an extra emphasis on making sure we have everything covered. If you're delivering a 2 million square foot industrial building in a smaller market, everyone knows about it. So you have to have that, right? When it comes to what we're seeing from a trends perspective, I'd say value, right? So the markets you're mentioning in the South and in the Midwest, where there still is value, and it's not the places that you saw the big uptick in population drive, right? Dallas and Nashville and places like that. It's more of those secondary and tertiary places. I think Corpus Christi was on the list, and El Paso. And there was in South Carolina, we saw some places there too, right? So I'd say there's the push and the desire to find value, and it's a price point thing too.
Oh yeah. So two major roadblocks continue to play out in the industrial sector at large: tariffs and sort of general trade policy changes.
Sure.
And these have resulted in sort of a wait and see approach from some investors and developers.
Yep.
Like how do you see this playing out in 26? And is there anything like on the horizon that you think might clear these disruptions?
Clear the disruptions? Probably not, right? There's a new disruption around every corner, it seems lately. I think the concept of stabilizing what the tariffs are and the expectations for the industry is more important than the actual tariffs themselves, right? I think the uncertainty plays a bigger effect on the outcomes, right? So having a stabilized understanding of what the rules are going to be makes it easier for everybody. If we can get that figured out, I think it's an easier approach. At the same time, demand, I think, is an uncertainty too. Like you had this big push towards electric vehicles, and you saw this big demand or this big ask of manufacturing through the battery belt and focusing on that. And it never really came to fruition. So now I think those companies are being a little bit more creative, right? I think you're seeing more automakers leaning towards hybrid vehicles, which makes, I think, it's gonna be a lot more receptive to the consumer. And that kind of change and that pivot will be a positive thing. But just understanding and I'd say a clear direction and a clear outline of what the rules are to play by will be beneficial for everybody.
Yeah, that makes sense. So sort of wrapping up here the industrial side, are there any other trends like you think we should keep an eye on for 26? You mentioned data centers before, like that's
data centers for sure. And now I think you read stuff on, is there a potential bubble? I don't think we're there yet. I just think the site selection is a specific thing. One thing we're seeing in the industry that we hadn't seen before really is more of this kind of like NIMBYism on industrial, right?
Yeah, definitely.
Which is a different take. So I think it's a more of a focus in specific site selection for locations, not just data centers, but all industrial buildings. But with data centers and the water issues in the West and electricity issues in the East, and just understanding what that would look like. So I think that's something to pay attention to. I don't think it's a critical issue yet, like the overbuilding yet. There's still too many unknowns when it comes to AI and what the needs are, but it's something to be aware of. And I guess the expectation for 26, 27, 28 would be more selective with site selection and just more direct and specific move with that.
That makes sense. So moving on to office now.
Okay.
Office is an asset class that has been like consistently maligned. Maybe
yes. It's had a rough go
over the better part of the decade, and I just wanted to start with like asking you what's your current outlook for the sector.
Yeah, so it was a positive push in 26, or I'm sorry, 25. Vacancy rates dropped from right around 20 to are now under 18, right? That's a positive move.
Yeah, big change.
I think at a market by market basis, it outweighs what the results are. So New York City is doing well. Demand's been up. You have more physical occupancy, right? That means people actually go into the building, which is driving that. San Francisco has bounced back a little bit in 2025 as well. I think that's more of a comparison to what it was a couple of years ago than these great numbers. Vacancy is still very high there, but it's improving. So those are two positive things that we've seen. In other markets where it's, I'd say, more focused on commute times and where the population has moved to, it's still a struggle. So the Sun Belt specifically is having a harder time with getting bodies into office buildings, and that's affecting demand.
Oh yeah. So there's a lot of regional variation.
100%, and the number I always go back to is physical occupancy. To me, that's the teller of where the demand lies.
Yeah.
And again, we're at 18% vacancy versus, historically it was coming off of a much lower number, entering COVID.
Oh, 10. Definitely, yeah. It's night and day difference. So construction-wise, not much is happening in the sector, but I was thinking
Yeah. No, real quick on construction, we're seeing, I'd say, high-end, I call them like jewel box buildings that are being built, 150,000, 200,000, 250,000 square feet.
Yeah, much
but
smaller.
Smaller, and it's high-end, best in class, right? And they demand the highest rents. And we're seeing success in markets for deliveries like that, where you're not seeing those like, I'd say, a trophy tower of the past, right? Outside of New York City, those just aren't being constructed anymore.
Okay, yeah. And do you think like this trend will generalize, or is it already?
So it's a small number. So I think, we're about 30 million square feet of space under construction in office, right? And that's out of 7 billion square feet, right? So it's a small percentage, but there is going to be a need for, I'd say, best in class space being delivered still, right? It's just going to be specific and at a much smaller square footage than it has been in the past.
Yeah, and is there any disruption like that you're seeing in on this side of things?
Yeah. So I feel like coming out of 25, people are feeling better, right? Even if you have debt that's still due, the debt is still a problem. And we're tracking about $900 billion worth of debt in just the office sector alone. But the thing I think that people will be talking more about coming in the next couple of years is just the AI disruption. And it's not necessarily, right now you're getting a lot of, how is that going to affect individual jobs? I'm looking at it as how is it going to affect office demand, right?
Okay.
And the going thought is it's going to have a negative effect on office demand. So you're going to see less demand as AI works its way into the labor market.
Okay. Wow. So that's something to keep an eye on. Definitely.
So less demand. We have, I would say, already too much office space that's existing, right? So if we have 7 billion square feet of space, there's already too much, and you see with the 18% vacancy. Couple that with the AI disruption, and there's a lot going on there, and you're going to see that the pain felt in that on the lower end of the market, right? So buildings that are functionally obsolete, right, and we've kind of been dragging along for a little while, but they're going to suffer first. But what we're paying attention to, and we're tracking more and more, is that underlying denominator number. Like, is that shrinking, whether it be from office conversions into multifamily, whether it be from demolitions, just how is that taking shape when it comes to the office market as a whole?
Okay. Yeah, that's interesting to look out for.
Yeah.
So co-working is a subsector that seems to have maintained its appeal despite overall challenges in the sector.
Sure.
And I wanted to ask, what are some advantages like staying active in this area?
Yeah, so bullish on co-working in the outlook of that.
Okay.
Right now, co-working 160 million square feet out of that 7 billion, right? So still very small, 2.3% of office space is co-working.
Yeah.
As we see demand influx on traditional side, what are people going to be what are people going to be pulled towards, right? And to me, that's flexibility with this additional uncertainty. So our estimations, and kind of running some numbers, is the concept that co-working is going to grow. It's going to look a little bit different, right? It's going to be more like a serviced office space, right?
Okay.
And I think we're looking towards the vacant office buildings that exist now to kind of fill that need, right? Yeah. So being repositioned as far as not just traditional 10-year deals, 15-year deals. It's going to be more of a serviced office, right? So you'll have already office build out, be more plug and play and shorter terms, 1-year deals, 2-year deals. But as the uncertainty of headcount is going to be a concern, and as we're waiting for the market to adapt to what that looks like, I think co-working is primed for significant growth, right? So that's a bright spot to me of the office sector.
Yeah, so some optimism.
Absolutely, and I think people are we're already seeing that, right?
Mm-hmm.
Buildings that are being delivered, or not being delivered, but being repurposed as more of a serviced office space, or are having an easier time renting out, right?
Yeah. And
I think the numbers play better too. We continue to see the destruction of value, right? So last year, I think the office numbers were about $181 a foot for transactions. Year before was $171. So you're up a little bit, right? But that's still 30% less than it was in 2019, right? Yeah. So you have the values going down. An opportunity for these co-working operators, to partner up with the building owners. I think you'll have more building owners just have buildings that are co-working and are flexible from the beginning too.
Yeah, yeah. That's cool.
It's a bright spot.
Yeah, definitely. But there's still a lot to go to close that gap.
There's a lot.
Price. Yeah.
And it's still a small percentage of the marketplace. That's the other thing, right? So even if it grows at 4 or 5x, you're looking at 10% of that, which is more along the lines of what a medical office would be, right? So it's still a subset for sure. Yeah.
So sort of wrapping up here and on the office side as well, are there any other trends that you think we should look out for in 26 and beyond? Like anything we haven't talked about already?
Not necessarily we haven't talked about already. I think our main focus is tracking what happens with demand, being aware of this AI disruption that's coming one way or another. It's coming, and then seeing where the interest is in buildings to have them be repurposed as either multifamily in a conversion, or repurposed as co-working and provide that option. But overall, I think we're looking at a reduction in total office space heading into the next 5-7 years. And it's not going to happen immediately. It's going to take time. Yeah, but from a 5-7 year outlook, I think we're seeing a reduction.
Okay. Yeah. So it's going to be a process, but it's
for sure. Yeah. And we said that initially too. Like during after getting out of COVID, it's a 9-inning baseball game. And we're still, in the early innings, not halfway there yet. So these things are, taking their time to work themselves through. And I think there's a blueprint out there of how the retail world came out at the end of the disruption from e-commerce that office will be following. And people who will get creative with their space, much like with retail, will be the ones that are more successful.
Yeah. Cool. Peter, thank you so much for taking the time to do this.
Absolutely.
For this very insightful conversation.
Tudor, great to see you.
Thanks.
Appreciate it.